welcome to Forex Travels. Today we'll be studying a new series, and the topic of the series basically is lessons, guys. So we are currently giving you guys lessons on how to learn how to trade on your own and not depend on us on signals, because we don't drop videos all every day. So yeah, okay. So first thing when it comes to trading, you have to my first take is have three pairs that you're willing to master on. So if you're willing to master USDT, NAS100 gold, you're welcome to do that. But my take is you can start with the currency pairs because they're way easier to analyze and they're not that volatile like NAS100 and USDT or gold. So okay, so first things first, when you analyze, make sure you start your analysis on the daily time frame. I know most say you should start on the weekly time frame, but it doesn't help, guys. It doesn't help because mostly a week is way too long because a lot can happen during the course of a week. So my take is always start your analysis on the daily time frame. And I recommend you guys to use TradingView because it's a very good platform for you to analyze your chart. So okay, let me start by doing this. So this is how we um put our support and resistance level. So I know most of you think that if we are going to focus on the whole chart. No, you're not gonna focus on the whole chart. You're just only going to focus on the current market movement. Like as you can see here is 2023 and now you're on 2024. So the important part is from 2024, but we can see that this part is more like a package. It goes from this point, it goes like this. So this is a package. So we're going to focus on this area right over here. This area, guys. I just hope you'll see this area right over there. So okay, we'll start by laying out the levels, which is support and resistance, right? And the mid ranges. So I'm going to zoom out a bit since you're focusing here. So I'm going to try to zoom out up until I see clearly. Okay, I'm gonna push it here. Zoom out a little bit, zoom out a little bit, and perfect. So as you can see, it starts from here up until over there. So I'm going to use this cross over here to get the levels. So I'm gonna put it over here, push it up, push it up, push it up, push it up, push it one touch. It's only like two touches over here and over here. So I'm looking for most touches. So, but since now we're beginning with this series, I want you guys to know how we do get these things. So if we see two or three touches, we are going to put a line on it and we'll see what's going to happen. So we'll put a line over here. That's it. That's the first thing. We choose another line again. Again, we go up, 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 up. Now it's three touches and you can see it over here again. So here's another level. The same process again. I hope you got it. Another thing. And then let's go from the top side as well. You'll keep on doing this up until you catered for all the points that you're seeing. Again, here a lot of touches, and then another. Gonna go from here. Da, 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 da. I see most touches right over here again. Oh, let me choose this. Sorry. Boom. And as I'm taking this, okay, another touches again. Boom. So at the end of the day, we have so many lines on our chat. So we won't even know where the market is going to be. But we know that these levels are respected. The market did touch those levels many times, like here 1, 2, 3, here 1, 2, 3, 4, 5, here 1, 2, 3, 4, 5, 6, 7, 8. So this one is mostly respected, right? This one, 1, 2, 3, 4. So you can see the market did touch all these levels. So the second step now is to filter out unnecessary touches, or the touches that are far away from this level right over here, where the current market is at. So this level here is too far from the current market. So we are going to delete this level here. At the top, we still need this level because it's close to the current market. And then here, it's close to the current market. We are not going to delete this level. This one right over here is still close to the current market. As you can hear, it's over here. So we can't delete this level as well. This one is still close to the current market. So we won't delete this one. But these two, they are far from the current market. So we are going to delete these two lines. I'm not saying they're not important, they're important, but we want to focus on the most important parts that we are seeing that are close to the current market. But can you see, guys, we do have a level here, but we don't have a level here. And then we are going to, because most of, if you study something like this, there's nothing this side. So you wonder if this is a true level or not. So this is when you go to the weekly or zoom out. You don't even have to go to the weekly. All you have to do is just zoom out and use a cross again. Check if this is a level. Boom. By just doing this, you can see there's a lot of touches. Let me do it like this. Let me put it here, a line here, so I can show you guys. By just doing this, you can see from back in the 2020, I think, you can see this level was respected. So it will be respected as well. It was respected here since the market failed to break it. So you're going to highlight this level as well as a important level. So now we are sure that this level is important as well. We are going back to the current market where we were. Okay, going to zoom a little bit. So this other levels that we're seeing. Then we say, okay, this level is respected, this level is respected, this level is respected, this level is respected. So yeah, so far this is how you draw support and the levels. Like, it's more like support and resistance levels. So naming it doesn't have any value. You all have to do just label the levels that you're seeing on the market and know how to use them. So on the second lesson, I'll be continuing with what to do next. And let us now go to another currency pair, or actually let's go to gold and see, because there's a currency pair. Let's go to blue metals or indices. Let's go to gold and I'll show you how to draw support and resistance on those pairs as well. So yeah. Okay, now we are on another pair, which is XAU USD gold. So also we are on the daily time frame, like I've mentioned, and you now all know how we draw our support and the levels, actually to label out all the levels on the market, right? So remember, we focus on the current position, right? There's a current from here to here. You can see this is the current movement, the current position where we are, right? So firstly, we zoom in a little bit on the market so we can see wherever is going on, right? We choose the cross, we choose the horizontal right? From this point over here, you can see the market is here actually. So you can see this level right over here, right? You can see this level right over here. This level is a potential. You can see there's two touches over here. You can see boom, 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 boom. Ooh, touches. We have touches over here. Up, we're gonna go up. We see a lot of touches again here. Then we go from the top. There's only one touch, two touch, but here we have three. So there you go. So this is how now we labeled all the touches that we're seeing, right? So if we think these charges are not valid, we can cross-reference with the previous if we have any. But if you pay attention, gold has been down the whole time, so we can't compare with the previous, right? So we'll have to settle with whatever we have since the market doesn't show us that much. Okay, let's zoom out. Let's zoom in first. Okay, right. Now you are going to filter out the levels we don't need on the market. So this is the playground is here, right? As you can see, the playground is just right over here. It's right over here. So the only way, so this guys basically makes sense. Like it's so simple. You don't have to think about it that much. So you have to delete this levels because it's too far, guys. The market won't reach this point anytime soon. So why would you put it there and confuse yourself with such thingies? So yeah. So this is our current levels that we are seeing on the market, right? This is the current levels we are seeing, which is the support, resistance, and the mid-range level here. So I'll explain this one here. The mid-range level is a level where the market usually takes breaks before hitting the support level or the resistance level, or is where the market usually turns around or break and retest, or break the level, retest the level, and push to the lower side. As you can see, the market went down here, pushed back here, and came back. The market came from here, pushed down, went back up, and retested this level, and went over here, right? Also here, the market went down, break this level, went back up. So if you pay attention, this level over here is where the market takes turns, breaks. That's where we see most of the reversal candlestick. No, not candlestick, guys, the patterns. So yeah. So this is our first lesson. I hope you all got the information, and we'll see you on the next lesson on Tuesday. Yeah, that'll be all from us. FX Travels signing on.